U.S. President Donald Trump is making good on his campaign pledge to put the heat on trade partners, friend or foe alike, to lower their very own barriers. In what he called Liberation Day, Trump announced sweeping reciprocal tariffs on April 2, covering about 60 countries, including the Philippines. The new steeper levies are a bid to boost U.S. manufacturing and get back at other nations for what Trump called were years of unfair trade practices.
Now, it's not yet clear how long the adjusted tariffs will be in force, but it is also seen to help America narrow its trade imbalance of about $1.2 trillion. What is certain is the recalculated levels will kick in on April 9th, and the baseline tariff of 10% will be implemented on April 5.
And among the countries bearing the brunt of Trump's reciprocal tariffs are Cambodia with 49%, Madagascar with 47%, Sri Lanka 44%, and Vietnam with export duties of 46%. The Philippines has been slapped with a 17% tariff rate, but most economists believe that the country is less vulnerable to the adjustments compared to others on Trump's list.
Now let's have an expert weigh in on this and talk about implications. We have with us financial strategist and economist Jonathan Ravelas joining us via Zoom. Welcome to the Big Story. First question, the bad news first and then the good news of the impact of this 17%.
All right. Good evening, ladies. So I think the first thing, it's really tarifying day to day. So I think the key impact to the Philippines is really more of really we're going to be affected by secondary effects of the tariff, which is basically inflation and currency volatility. The good news is that because we're mostly domestic, so we're a domestic economy, so in terms of our exports, it's not as bad compared to what the other countries had. No, I think the only problem that we have is that we import so much food and other things. So that's where we eventually get the impact of the potential rise in inflation and currency volatility.
Do you see a push for the depreciation of the peso to help, well, some of our exporters in electronics and also processed agricultural goods?
Okay, if we actually try to look at the impact of a 1 peso depreciation to inflation, it's quite minimal. No, it's around 0.04%, thereabout. So it's not really that bad. It's just that the key question really is more of the potential volatility as a competitiveness against other countries. So as long as we're probably within a range of maybe 58, 58.50, we can still remain competitive. No, slight adjustment that will more or less be the impact of that 17%. Then I think that is tolerable in terms of the depreciation of the peso.
So there are some who point out that the silver lining may be our ASEAN neighbors who have been slapped very high tariffs may use the Philippines as a jump-off point for some of their exports. Is that a possibility?
To a certain extent, during the time of Duterte, we've seen that. No, we've seen a little bit of those China, sending products here and then shipping it out. That could be a possibility. Or at the same time, it can actually boost the Philippines as an alternate site for these companies to set up because the tariff is quite low.
Okay, but for the government to downplay it, is that fair to say na talagang maliit lang yung magiging impact? Because we're only looking at, of course, the first line impact, which as I think we can all agree, it won't be that bad, but it's the catching a cold from like a global slump of sorts.
Okay, let's put it this way. Our economy is 70% consumption driven. So what is important is to be able to stabilize the importation. So again, we need to be able to start looking in as a country. Tama yung gobyerno in saying that, hey, it's not going to be as bad because the export that we sell to the US is electronics, which are part of a bigger product pa. So it's not going to be as that severe. Remember that other sources of our income are OFWs, and basically you have the BPOs, no, which are still giving around $60 billion a year. But with that said, we need to be able to also look into the potential effects of this inflation. Maybe other countries will also have reciprocal tariffs, and they'll try to protect their own economies, no? Instead of further exporting out, they want to make sure that the food services are there. So we need to build the supply chain.
Jonathan, do you think we're in the position to slap reciprocal tariffs as well on the U.S. right now?
No.
It's not
So
good. It won't be good.
I think what we need to be able to do is really try to anticipate what the potential effect of the secondary tariffs. So at the moment, if you recall, during the time of President Duterte from 2017 to around 2018, in the first 2 years, we slowly felt the impact of the rising of the weakening peso, and eventually the rising inflation. That we saw a peak of 6.8 in 2018. That eventually created a top on the Philippine stock market. So this time, we're still licking our wounds from the inflationary pressure coming out of the pandemic and what we saw in the last year. So we need to be able to manage this currency volatility and inflation well.
Okay, before we go to opportunities, Jonas, I just wanted to get your opinion on this. Some economists and analysts are saying, this Liberation Day tariff rates might not actually last forever once Trump realizes that, it will have a big effect, ripple effect. What are your thoughts on that?
Okay, you see the problem, we're thinking very literal. If you remember the time of President Duterte, we analyze and we wait overnight just to listen to what he'll say. This is very similar to what Trump is doing. So if you recall, Trump wrote a book, The Art of Deal. So this situation is really trying to create that near-term uncertainty to get what he wants. And what does he want? He wants to make sure that he's able to fund his government expenditure at a cheaper price. So when he got elected, the 10-year U.S. Treasuries was around 4.5%. After the announcement of the tariff last night, eventually 10-year yields fell to 4%. And what he wants is that when people get scared, they run to government securities. So he's able to pre-fund or refinance his government spending at a cheaper interest rate. So that's what's in his mind. But for us, the speculators and those that are affected, were worried if the impact of this thing will create a recession. And that's what we're feeling today.
Well, Jonathan, you also have Asian countries like South Korea, China, and Japan already agreeing to promote regional trade. I mean, should we also be joining those discussions?
Definitely. I think this has always been there when we started talking about in early 2000, the ASEAN Economic Community. This was just after the Asian financial crisis. So probably thanks to this disruption, this would actually further enhance ASEAN economic cooperation that has been, put on the sideline with so many issues.
Right, and we should also focus on growing our own food, and so that the imports will go down. But thank you so much for your insights, Jonathan Ravelas, once again, for joining The Big Story.